Okay, probably everybody can hear me. And I would like to present our speakers for our webinar. It will be Scott Douglas. He's like guy who has really good experience in launching ICOs, and as well he's let's say has good reputation, in crypto community, and he has good background in launching own blockchain projects. That's why I've decided just to arrange such panel discussion with him and Mark Turrell, who has also good background in working with venture companies, fundraising in different ways. We're going to talk about different kind of different ways of fundraising for startups. Also, I guess Scott, he will share his own experience, because it's also interesting just to hear somebody who has real practice experience in launching own ICOs, what kind of challenges he has already faced with after launching ICO, so what challenges he has already faced, I mean, in development phase and meeting his commitments. Okay, so in case you have any questions, you can write in our chat. So Mark and Scott, they will definitely answer them, because we will have some discussion, in the end of our webinar. And I'm also going to start with some kind of presentation, probably with also just general overview of the market and some kind of statistics. Okay, I'm going to start. I was loading. Okay, so I just wanted to point out the main probably pros and cons, and of launching own ICOs or just working with venture company, and some general trends in probably this year, because we are talking with lots of startups and they have, let's say, different views on how to raise money for their startups. And for some startups, it's okay just to launch ICO. For some, just to work with venture company, and just we want to find out when and why ICO probably works better or worse. Regarding the general trends, so here we see that even this year, ICO is becoming more popular. You understand that when you want launch ICO, you don't have some kind of commitments. You have and you should present your white papers, roadmap for the audience, but they are more strict if you work with a venture company, because in this case you should have really good pitch deck. You should also provide a well-prepared business plan, how we're going to scale in the future, and let's say it's your so your long-term some vision, how we're going to growth. It's harder to get money from venture company, and it's harder even from year to year, and ICO, let's say it's too shaky foundation to build your business. But this year, just with ICO, we're launched with 900 ICOs, and it's around $16 billion that were just gathered via ICOs, and it's numerous one. Top countries where ICO right now are very popular, US, Singapore, and UK, and you see these figures. So from whole amount of already launched ICOs, these top 3 countries are very popular right now. And you see that countries by number of ICO per million of people. In this country, Estonia is first one. Also, I just want to point out that half of ICOs, they died after just 4 or 5 months after token sales finished. And it's also statistics that just show that more than 40 even percent of all investors who are going to just contribute in ICO, they even don't look through white papers. And it's also just good hint when you are going to launch into ICO, you should definitely look through properly of like white paper, their roadmap, how they're going to implement their idea. Because just if you launch ICO and you don't commit your responsibilities, so you'll be called like scammer. And this is also like the main like probably disadvantage for people who are not going to commit their obligations, that in public community, so everybody knows you, and if you fuck up something, so you will never again get investments. And just in this Q1, this year, just fundraised, we are ICOs. It's like you see that really significant amount. And if we talk about numbers of ICOs that were already launched, as I mentioned, there's more than 900 ICO just launched within these 6 months. I just also wanted to point out the case study of Orcasci Financial. It's like a Fintech startup. These guys wrote their own like story why ICO was like unavoidable for their like situation. They had a choice to work with venture companies or just to launch own ICO. Problems that venture company they were like working with, previously they didn't want to invest in crypto startup, and that's why they just, and like another problem was that they also didn't want to share the just to share their equity with another investors, shareholders. That's why they decided just to launch their own ICO. And indeed, they've got 25 million, just within several months. And it definitely was enough, to launch an Ethereum-based technology for their digital wallet. And right now, it's a very successful startup. So here we see that it's a good example when ICO really works good. Indeed, they also just provided just some overall forecasts how they're going to develop their own fintech project without some strict commitments, and they were fair with that. It's also a good example of when ICO indeed works better. So just take a look more closely about this ICO. They have very interesting story. Also, I guess Scott and Mark, they will point out and dive deeper into the main differences between working with venture companies and ICOs. But the main difference probably will be just in audience you're focused on, because venture companies definitely mean that you're working with some experienced owners of businesses. You should provide a good pitch deck, business plan, and if we talk about ICO, so you understand that everybody can contribute into ICO. In most cases, some middle class who has some just let's say in cryptos, and they can just contribute, and they expect to get some profit in short-term perspective, not in long-term if we talk about venture companies, because they expect to get some revenue and profit in long-term perspective. Regarding goals and aims, they're different. Probably if you want to build strong community, to have good relationships, to get right connections in, let's say, in some business domains, definitely it's better to work with venture companies. They are providing them. If we talk about accessibility, probably if we hear some founders of startups, you know that the investors, they require some personal meetings because they're going to invest money in your business, and in US it's even required to have some personal meetings with investors. If we're talking about ICO, so it's like accessibility from anywhere. Just we talk here, so we have some limitations regarding the legal, and like some other stuff. And publicity, so you understand, so you will get some trust credit, from investors if you talk about a venture company. But if you talk about ICO, so if you don't meet your obligations, here you will be like called like scammer, and in the future, so you have no chance to get like investments. Regarding the venture companies accounts and ICO accounts, so here we see that like you just need to decide, for what your money, will be exchanged. So let's say, so you have some tokens, and how your like token holders will get in exchange for your money. So we talk about utility or security tokens. And that's also just after that you should overthink about like a tech implementation, but I think it's another topic, like how to launch ICO. And also you don't have any like geographical limitations. It's definitely rapidly, because you can launch ICO just in three weeks indeed, because to integrate with ICO cabinet, for landing page, work, probably you need like several weeks to work on your white paper, and that's all. We talk about like good and well done like business plan for like required for venture companies. Here you need to spend more time, I think, because venture companies and investors, they want to see some proof of concept in most cases, and just after that they are willing to invest in your projects. And we also have some case studies of projects we worked on, and some samples of startups. Some of them were, some of them they have been working with venture companies, some of them they have already launched own ICOs. So one sample is like one project like Helen. It's like financial trust platform based on blockchain. But this is like sample where when venture companies and like connections, with investors work, like it worked here better than just to launch ICO, because she's building a very strong team in Denmark, and trying to build good connections with venture companies. This project aims to build a trustworthy platform between middle-sized businesses and let's say using like distributed ledger technology for that. And so she won around 9 different kind of competitions, speeches and other stuff, and still is going to grow up, and here is, I think, a good sample. Regarding also another kind of projects, we've launched one project called ORME Coin, and also they have a global project, ORME Global. It's also very big like project we worked with as well. They also launched ICO, very successful ICO. After building just one coin, they decided just to build whole infrastructure around this coin. And in this case, for them, like ICO worked better because they got like rapidly required amount needed for building whole infrastructure. It's also like sample when like ICO works like better. And some just point out some technologies that right now are very popular, and frequently used, this year, like blockchains like Ethereum, Bitcoin, Dash, Hyperledger, Fabric for like as a permission blockchain solution, multi-chain and Quorum, and also using like tokens. Just here mentioned, like were also popular in most cases, definitely like ERC20, but also this year. Also popular is getting more popular. ERC 721, similar to Petrashchuk. How it works. I guess I'm done. So let's Probably, I guess, like Scott, he will be, the second speaker. And I will just, I will mention that Scott has a good experience, in launching own ICOs, so has experience, what to do, after just your token sale, you're finished. Okay, Scott, you are.
Yeah, for sure. Can you hear me, guys? Can you hear me?
Scott, are you with us?
I'm right. Can you hear me? Can you hear me?
I don't hear you. Yeah.
Can you hear me?
Scott, you also can share your screen, or even like just.
Okay, you can all hear me. Good.
Turn on the video.
I can also, somebody shut off my video, so if you could enable my video, that'd be cool too. Oh.
Scott, you can turn on your video, so we will see you.
It says, okay, 1 second, I apologize. It says you cannot start video because your host has stopped it.
Or you just can share the screen.
Okay, I'll share a screen. Okay, can everyone see the screen says ICOs versus VCs? Can everyone see that? Okay, awesome. Okay, so it's too bad I can't do my video, but that's okay. Doesn't matter what I look like, I'll just tell you about myself. So my name is Scott Douglas. I'm based in Toronto. So I've been working with Elena and Fire Labs for a number of projects, a number of different collaborations. They've worked on technology that my company has produced, as well as we've gone in on several deals together, working with other companies, which is something I'll let you know. That's what my company does. So I am the founder and CEO of a company called the Crypto Improvement Fund. What our main mission is at this point in time is to educate about cryptocurrencies and blockchain technologies and help companies and businesses understand the potential use cases, not just of cryptocurrency, but of blockchain technology in general. Now, that being said, a lot of the companies that we work with, a lot of the companies that are playing in this space are companies that are doing ICOs and choosing to crowdfund through an ICO method as opposed to traditional venture capital raise or going to friends and family for seed funding. So it's a very interesting space. A lot of the companies that are emerging are going to try and fundraise this way because obviously there's a couple of benefits which we can discuss. I myself funded my own startup. It's not a large startup. We are just at this point a consulting firm. We have big dreams, but they haven't been realized yet. So right now we're working with companies, and that's sort of our sweet spot. But I also went through an ICO, and I have a native token that can be used to purchase services on my platform. And I've definitely, like most people, have learned the industry, both the benefits and the drawbacks, because nothing that I've ever done in my professional career in B2B sales or management or consulting has ever prepared me for something like the ICO space. It's definitely interesting. So before I go any further, I'm going to speak about some of the differences, and Elena already touched on some, but I want to go into a little bit further detail. The differences between what to expect when you're raising money for a project. Obviously, that's what we're looking to do. And you're going through traditional funding routes or through ICOs. So the goals, if we compare the goals of each, so if we go to venture capital, the goals would be outside of just funding. You're getting experience, connections, and guidance. So when you go to a venture capital firm or you go to a high net worth individual, they are lending their experience to your project. So the people that will put in $500,000, $1 million, $10 million, whatever it may be. These are people that are going to be successful individuals or groups of individuals. They'll have achieved success through business at some point in their career, and they'll be able to guide you, because a lot of entrepreneurs are young, they're inexperienced, and they need that senior leadership to help them along. Now, this is something that people may not realize when they go through the ICO route, but they lose, well, they can obviously find advisors and whatnot, but they lose that experience that they'll get from bringing on a tenured investor. Another thing an investor, a venture capital investor will do is they'll be an influencer, obviously, because usually how it will work if you go fund your business through a venture capital, say, probably not for like an angel round or a seed round, but say for like a Series A, you'll have a primary investor who will lead the round and will sort of reach out to his network of high net worth individuals, and they will also sort of join in on the funding round. So he'll be, or she, or whoever, will act as an influencer for your project. And the last thing they'll do, which is extremely important, is they'll validate your product or lack thereof. So one thing that the ICO space enabled is to allow a lot of business ideas without validation to go through and to receive funding. When you go to a venture capital, they've seen X amount of startups. You know, they must get 100 different emails coming into their inbox every single week with a new company trying to pitch their idea, and they'll be able to validate whether or not your idea has some run rate to it. So that's another benefit. Now let's go to ICO, because there are benefits to ICOs. I'm definitely sounding more or less one-sided with the venture capital, but the main benefit with the ICO is the fact that you can maintain equity in your company. So with an early stage startup, equity is very expensive, and what I mean by that is that a venture capitalist will not give your company a very good evaluation. So you will be selling massive amounts of equity in your company for whatever amount of investment they're going to put in. The second thing is quick to market, so there's much less bureaucracy when you're doing an ICO. Now, this is speaking about utility tokens. It's not speaking about you know, recent legislative issues or regulatory issues where there is going to be a lot of bureaucracy. But the traditional ICO is quick to market, quick to raise money, you know, quick to build your product, quick to hire your team. You don't have to prove something that a lot of venture capitalists look for, which is a clear path to revenue. In fact, many ICOs are not trying to be for-profit companies, where you see companies like Ethereum, Neo, they're nonprofits, they're foundations. So they're not even proving a path to revenue, whereas a traditional startup would, or a venture capitalist would look for that in a traditional startup. And you also, now there's going to be a little bit of a shift in the mindset of investors because people have been burned, but there wasn't a need for an MVP, or minimum viable product. Now that's going to change a little bit as the ICO space becomes a little bit more mature, but we're talking like, let's pretend we were like a year and a half ago, where a lot of companies raising money with no product. ICOs, your goals are community focused, so you're focused on building a community, maintaining that community, and leveraging that community to help your product grow. That community, they're going to be your cheerleaders, right? They're going to be your greatest fans or your worst enemies, depending on how you market to your community. And obviously, it's a niche market, whereas the type of people that you're looking to target are very specific, as opposed to a traditional software startup where your audience can be very broad. So I don't want to spend too much time. I'm going to go through this stuff quickly so I don't take up any more of Mark's time. Your audience is much different between a traditional venture capital funded startup and an ICO startup. With a venture capital, your audience is, like I mentioned before, they're very smart, they're experienced, they're tenured, they're difficult to deal with sometimes because they're all very successful individuals, but at the same time, they're reliable. So you're not going to have flaky investors. If they're putting in $1 million+ into your project, they're going to be with you every step of the way. The audience, and I'm going to say this as well, in general, is very amateur. And what I mean by that is they're retail investors. So these are not, on average, high net worth investors. And don't get me wrong, you can still have a high net worth investor invest in an ICO, but I mean the people that are putting in, say, sub $5,000 For them, it could seem like a lot of money, but in the grand scheme of things, it's really not a lot of money. So these are amateur investors who may be caught in the hype. I put flavor of the month just because I know that it's the next hottest thing that people want to invest in. I also put uneducated investors, and this is not like to do with their actual education in terms of like their career or their schooling, but it's they're uneducated about the risks involved in investing, because there's a very low barrier to entry to investing in ICOs. Whereas say traditionally, if you wanted to invest in stocks, like now there's companies that will help you. Like in Canada, there's like Quest Trade and a couple different ones. I'm not sure. There's a couple of ones in the States too. But traditionally, you would have to go to like a broker. You go to a waterhouse, and he'll give you options for investing, and he'll explain the various risks and the potential ROIs and the history of the companies and whatnot. With ICOs, you don't have any person telling you about the risks. You're just in front of your computer with access to a bank account full of money, or Bitcoin or Ethereum or whatever, and you're able to just put it in to wherever you want. And it's up to you to do your own due diligence. There's no broker doing any due diligence for you. So that's what I mean by uneducated. There's no sentiment and there's no value from these investors. The investors are not emotionally tied to your project, and they don't offer any value. So as opposed to a venture capital investor who would, maybe he's a senior business leader, a C-suite from a past life, he can offer some significant value. An ICO investor, a retail investor, would not be offering that value. Requirements are a little bit different. So with a venture capital firm, and also, okay, let me premise again, the ICO space is getting much more mature, but we're talking about traditional ICO space. So obviously some ICOs do have some of the things that a venture capital firm would look for in a startup, but it's not to the same level yet. So venture capital obviously would look for a strong team. They would usually look for a working product or proprietary IP or intellectual property. They may look for customers or signed agreements from customers stating they would buy the product if it was created. They would be looking for revenue, or what's called a clear path to revenue, where you have, like I just mentioned, the customers that have been lined up, and they'll also be looking for equity in your company. If you go the ICO route, usually the team is important, because for optics purposes, the front end of your company are the people, because there's really nothing else that you have under the hood, right? You don't traditionally have a product, so the team means a lot. Technical know-how, if you have a non-technical team in the ICO space, it's not held in high regard. It's kind of frowned upon. It's better if you do have a technical team, just because the people that are involved in the ICO space or the cryptocurrency investing space are very technical, and they like to see that knowledge on your team. Working product, this is becoming more and more important as more and more ICOs fail. People are expecting more out of an ICO project, and they would like to see an MVP before they invest. And then also for the ICO space, you need industry-specific experience, which is harder to find. So I'm talking about like blockchain developers, whereas you could find a full-stack developer for a traditional software product very easily. So that's another difference. Geography and accessibility. Venture capital, you will definitely, if you're asking for a lot of money, have to be face-to-face at one point, not maybe for the initial meeting, but eventually they will want to see you. They'll fly out to you, or you will fly out to them. So that's the in-person piece. You will have to do a pitch or a presentation, most likely before you get any money at all. The venture capitals will lead the investment. I mentioned this before. There will usually be a primary who will go in on a deal, and then he'll bring in his high net worth associates to help fund whatever series you're working on. And also, venture capitalists will prefer close proximity geographically. So if you are working with a venture capitalist in, say, for Toronto, he's not going to feel as comfortable working with somebody on the other side of the world that he has no ability to get in touch with or to see regularly. And this is not like, is not a deal breaker, but obviously if you want to try and sell something, you want to try and build a connection with somebody, and you want to try and get a lot of money out of them, it's easier if you can develop that personal connection and you spend a lot of time with them. ICO space, international audience, and there's zero borders, right? There's you don't pitch face to face in the same way that you would for venture capital. You may go on a roadshow, but that's not the same. And also the no borders of regulatory. You just have to pick which countries you will or won't allow to invest in your project. Press and public perception. Okay, so venture capital, if you raise money through a known venture capital firm, there'll be a familiar name. There's going to be credibility tied to your project because of the people that are investing in it. And the investors share the failures. So the investors that will come in through a venture capital firm will have done this a lot, and they'll know that there's a very good chance you're going to fail. That's just traditional startup numbers. And if you do fail, they're going to share in that failure, and they're not going to look at you in a negative light. If, in fact, actually, they may recognize you as a good leader, and this was just not a good idea, and they may actually want to develop a relationship with you and maybe try another project with you. Whereas in the ICO space, first of all, if you fail, you're just considered a scam. It doesn't matter if you failed because you shut down your website and ran away with everyone's money, which isn't really a fail, it's more an exit scam. Or if your business just failed, which unfortunately is the greater majority of startups, they do fail. So in the ICO space, when you have a startup and it fails, you're just labeled a scam. And that's going to unfortunately be the case with a lot of companies that we see in the next couple of years, just because it's not like you say 90% of traditional startups fail and only 10% of ICO startups fail. Like, no, the numbers are going to be very similar, if not even worse, because a lot of traditional startups that would not get funded because of the validation piece that you find in a venture capital arena may have gotten funded in the ICO space. So that's a huge difference. And I think
Scott, I just want to interrupt you. I've got one question from the audience.
Okay, sure, what's up?
From Denmark, a guy is asking about, could you just point out the main challenges you faced with during ICOs and after the token sale was finished, and also just some advice or hints from you.
Okay, so the biggest challenge that you have to, so it's not a challenge, it goes back to community, because the point of running an ICO, the main benefit of running an ICO is to build up your community, because that's your, I guess, what's the best way to put this? That's going to be your strongest asset coming out of an ICO. So that being said, a lot of people that go into building an ICO don't understand the amount of maintenance that a community takes. So it's constant updates, constant communication, which is something that a private company, if you raise money just from one VC or two VCs, whatever, you're not going to have that type of requirement. So when you, let me see. Oh, there I am. Okay. Hey guys. So when you launch an ICO, the toughest part is managing that community post ICO, because they're going to expect it's an uneducated audience more often than not in terms of expectations of investment. So they're going to expect, just because of the way the market's gone in the past 7-8 years, that their investment's going to go through the roof, to the moon, quote unquote, overnight. And you have to manage those expectations, and you have to educate your investors, and you have to keep in touch with them regularly, because if you don't, that's going to be a huge burden and a huge headache. So I think that the one thing that I always sort of personally I work on, and something that I always make sure that people understand when they're launching an ICO, is that the type of community engagement that you have at a small, even though it's a small scale company compared to like a traditional publicly traded company, the type of engagement is similar. So if you raise X million dollars, you have to budget some of that towards a significant amount of community management and sort of customer facing marketing and whatnot. Whereas if you were private, you wouldn't have to deal with that. So that's, I think, the biggest thing that people don't realize going in, because you see a lot of companies, they do very well during the ICO, and they market and they brand themselves well, but then they don't engage with their community after the fact. And then you have, say you had 3,000 investors, 5,000 investors, 20,000 investors, you have all these people that you're constantly having to answer to. And I think that can be a huge time suck and energy suck on the company. So that would be the number one thing that I think catches people by surprise. The other thing that, depending on what type of product you're building, would be the technical expertise that you have to bring on. So having a technical co-founder, I think, is a must. I think it's very important even in a non-ICO space to have a technical co-founder if, say, you're building some software. But in the ICO space, you're probably building a blockchain-based product to some capacity. You're going to have blockchain built into something that you're doing, even if it's just like a token or a coin or whatever. But the blockchain expertise, true blockchain expertise, is few and far between, and it's very expensive. So without having a technical co-founder who's sharing in, putting in some sweat equity into the company and being able to build out your solution or your coin or your token or whatever, you're going to pay an arm and a leg, and you're going to be at the mercy of a blockchain developer, which is even worse than being at the mercy of a regular software developer. Because if you lose your blockchain developer, or if you have a falling out, or he doesn't deliver the product, or the product doesn't work properly, it's going to be very hard to find somebody, because it's not so popular to be a blockchain developer, to fill that gap. So I think, yeah, technical is very important, obviously, and community management are two of the probably the more important things when you're running an ICO.
Mm-hmm. Thanks.
So yeah, that's my piece. So just to summarize, this is also a point that I want to sort of drive home. You don't have to pick one or the other. And I'm not talking about like securitization of tokens or securitization of assets. I'm saying that you can try to get funding through a VC. You can pitch your company to VCs, and also be running an ICO. Like, it's not mutually exclusive. And I think that when you're looking to raise funding, you need to find your projects one than the other, and to totally isolate or silo yourself and say, no, I don't want VC money, that's too difficult, or I'm going to just go traditional VC, and I think ICOs are all scams. Those are both incorrect ways of looking at it. So I would suggest that you do reach out to traditional VCs to help you validate your business idea, because they're going to give you great feedback. But at the same time, you can also stay at the stay in the cutting edge or bleeding edge of technology, and crowdfund through an ICO, whether or not it's just tokens or security tokens or whatever it is. I think it's a great way to fundraise, and I think the liquidity and the market and the community are great things to have associated with your company if you can manage them properly. So that's my piece.
Thanks, Scott. I also just want to present our second speaker. Mark, you can join us. Just briefly about Mark's experience. So he's author of several books. One of them, by the way, is very popular, Petrashchuk of Scaling. It's very useful, I think, book for founders of startups. He has also great experience, and background in fundraising in different ways. Also, he previously worked with venture companies. So he's also founder of Vork, interesting also project. And right now he's considering, for instance, to launch ICO. So I guess he has really good experience to share with audience and to share his story. Yeah. Mark.
Hi. Can you hear me okay, Helena?
Yeah, by the way, you can also turn on video if you want.
See, I'll leave the video off just so I have bandwidth. Can you hear me okay, Helena?
Mm-hmm.
Perfect. Very good. So hello, everybody.
Hi. Also you can share the screen if you want.
No, I can't. It's not a very good place for me to share the screen. I'm taking up my holiday to be here today. So, but I'll be quick because I have creatures that are running around that I need to go join. So my background, I'm a technology entrepreneur by background. I started my first company by getting some customers, using the invoices from the customers to borrow money from a bank, using the borrowed money to then hire people, gain more customers, grow. And the first time that I took outside money was actually when I did an IPO. So I did an initial public offering in the London Stock Exchange back in 2006. And actually turns out I was the last company to go public in London pretty much for about 18 months. It was such a hard market. But that means that I have experience. Since then, I've raised money from angel investors, from institutional investors. I've worked in companies that had venture backing. So venture-backed companies with money from venture capitalists. And then also been advising and structuring some ICOs and looking at what happens next. I'm also running a group called TICA, Token ICO and Cryptocurrency Alliance. The TICA meetup started in Berlin a year ago. So I'm very sort of active in the space. Given the very short amount of time that's actually left, if we keep it quite focused from a practitioner's perspective. So for many people, I don't know where you are all in the world, but unless you're living in whatever, London, Paris, San Francisco, Berlin, your ability to access serious capital is practically zero. I've done a lot of work in Eastern Europe, and it used to be that angel monies might have $50,000 or $100,000. VCs, if any of them exist, might be able to cut checks to 1, 2 million. But right now, what's fascinating in the last 18 months is that ICOs from these regions, which were very much underdeveloped in terms of capital, have been able to raise anywhere from the sort of 2, 3 million at the very bottom end up to the sort of 50 to 100 million. So clearly some things have changed in the funding environment. In my perspective, some things that I find very interesting about fundraising from ICOs and token sales rather than the traditional route, part of it goes down to control. So who controls the business, who controls the vision, who controls the purse strings? So that's one, is control. The next, the most fundamental one, is liquidity. So if you have a company and you've had it, let's say, angel funded, and the company's doing really well and you've gone through 2 rounds of extra funding, and the valuation of your company in the traditional model is, let's say, 10 times the amount, and now let's imagine you want to buy a kitchen. It's almost impossible, unless you're one of the very, very large private companies like Uber and Airbnb, it's almost impossible to get any form of mini exit as a founder or as an angel investor to get your money out. So liquidity is the absolute killer problem in terms of traditional investing. The average time it takes for an angel investor to get their money out is 10 years, if they're lucky, because 90% fail. And the average amount of time it takes a VC to get the money out is 7 years. And again, they have a 60% fail rate. So control liquidity. And the third thing that I'd like to touch on is, let's say, design your own instrument. Because if you like, equity and many of these instruments have been sort of largely fixed in terms of what it does, its properties, for quite a long time. And right now, with the world of tokens, you can somewhat design your own instrument. And at least because it's a very early stage market, you can see if investors will buy into it. In the world of ICOs, I think what happened last year will be, let's say, not quite rapidly forgotten, but last year is not 2018, and 2019 will be very different from 2018 as well. What we see is that, if you like, there was the onset of the utility token, so these functional tokens such as Ether, the civic tokens and others that were operating within apps, versus the badly named security token. I'll go into why these things are very badly named, but the security token being a little bit more like equity, but not being equity. The key distinction really is that if you're going to touch investors, sometimes in the European Union, but particularly in the United States, or you're going to have tokens that will be traded on exchanges where there are US people involved, either you or the exchange will need to be SEC compliant. And if you've raised money with the promise somewhat that the price will go up, that will typically consider to be an investment. And that means you need to file with the SEC to become legal. If you're not legal, bad things will happen to you. The SEC doesn't screw around, so people do go to jail. And I think what we've seen in 2017 was a lot of, let's say, barely legal / illegal sales that went on. Some of them can survive because they're in isolated jurisdictions, such as some Swiss utility tokens can mostly survive. But gradually, if we are to start chewing into sort of materially amounts of sort of normal money, we'll need to become more and more legal. What it means then is that when we do our offerings, whether they're utility tokens or don't actually have any use within the application but are primarily for fundraising, we will need to be more compliant to laws. Particularly if you're going to be US based or touch the US or touch the European Union, you'll need to be more compliant. The good news is that there's a huge amount more money if you're compliant and legal. The bad news is that it's going to take more work. Maybe just again, because we don't have that much time, let me talk a few other, let's say, observations that I have. I don't really agree with this community aspect. If we look at the bulk of ICOs that have gone through in the last 6 months, maybe 9 months, the bulk of the money, as in around 80, 90, 95% of the money that's gone in, have not come from community members. They've come in from institutional funds or crypto funds or whales. What that means is you begin to look more like a traditional IPO, where even if you push out shares to the market or tokens to the market, you don't have 5,000 people owning the stuff. You have, let's say, 10 people owning 95%. You may have topped it off with a public sale, but I can see less and less actual public sales taking place. However, we begin to not talk about community and we talk about investor relations. And this is, if you like, the dark secret of ICOs. I think many traditional investors should not be investing in ICOs because white papers are crap. I'm just absolute, unadulterated, from an investment perspective, total crap. Because if you read them, they're garbage, and they don't have any numbers in them. What it means then is that right now, the fundraising instruments that we're currently using are very, very, very poor. Now, that being said, I'm an extremely positive supporter of tokens, and I can see that quite quickly we'll end up where white papers will morph into prospectuses, where there will be financials, and where we can begin to bring properties into these tokens, which will actually add material value in. Because at the moment, I would really hesitate to call token holders investors. They are in the sense that they bought a speculative instrument, but many of them have not, let's say, invested in the growth of the company, and many of them have invested in nothing. They've actually invested in the ability to use a product that they have no intention of ever using, and if they don't manage to get the marketing, sales, and the basis of the business right, or build a product, they've got nothing. So it's a very, very strange world, but I think there's a huge opportunity, and I myself am planning my own ICO, and I'm at the pre-ICO stage. And what I'm doing for mine is a security token, which is really like a value token that is treated as a security as a fundraising instrument. And then a utility or a functional token in the app to allow me to do in-app currency stuff and to have these things as separate and to add special properties. But sorry that we don't have very much time. Hopefully we've got time for questions. But these are just some sort of basically sharing some thoughts, what I see that's happening in the marketplace, and some of my opinions on the quality, good or bad, and the future of what we're going to see. Back to you, Elena.
Thanks, Mark. Just Mark, I have one question. One guy, he also wrote for us on Facebook. So he's asking regarding like ICO, why you are considering right now to launch ICO. So what happens after like first investments? Mm-hmm.
Yeah, so what I'm doing, so if I take you through the route for me, so with my Vork application, I started off as a classic angel investment. So I raised, 150K, 1.5 million cap on a convertible note that converts to equity. I then decided to do an ICO. I've gone to my original investors, and they've all agreed that they'll pretty much cancel their equity rights, and I will double up their money in terms of tokens. So they will all have made 2x return in the first year. I'm doing the pre-ICO is structured pretty much as an angel round, which converts into tokens at the cheapest price possible. Mm-hmm. But then if I don't do an ICO in a reasonable time frame, it'll convert to equity. So they'll still have something. Again, that's unusual. To raise money, raising $500,000 US, or whatever crypto equivalent, around 250 goes to product, 250 goes to the ICO, to pay for primarily legal, accounting, and I'm trying to do minimal marketing. When you do ICO, you need to decide, you're going to go out to the general public, so you're going to do a crowd-funded sale, or you're going to go to accredited investors only. So my background is more traditional, IPO, so I would only do accredited investors. So high net worths, as in you can write a paper to say I've got a house worth $1 million, plus I have liquid assets of more than 200K. So plus crypto funds and other traditional investors. That would be where you do, in the US, you'd call it an SEC Reg D, where you only go out to accredited investors. Now the reason for this, so then I raise 5 million to 20 million hard cap. But what many people don't realize with these ICOs is that you can always do a secondary placement if you've given yourself the right to do so. So if your token has gone out there and is trading and is doing fairly well, you can always go back to the market to raise more, and just by issuing more tokens. You need to see if you've given yourself the right to do so up front, but it allows you to pretty much use effectively a version of the public markets. And if you've done your initial token sale, and then you have trading and you have some track record of trading, even if it's just 3 months or 6 months, it makes it much cheaper and easier to do a secondary placement, which just means you issue new tokens to the market. Now, the extra one is I've even looked at doing an IPO, let's say 18 months afterwards. And there's a very nice, what I'm calling the cashless IPO, because if you've raised enough money on token sales, you may not need to actually raise cash. So one of the things that I found really interesting with Spotify is they did a cashless IPO. So they converted a private company to a public company, which again created huge amount of liquidity for all of the equity investors. And that is also relatively easy and relatively inexpensive to do as well. Particularly since I've seen the marketing costs of some of these ICOs are insane. Like actually insane.
Mm-hmm.
It's much cheaper to do an IPO.
I got it. Thanks, Mark, for providing your answers. Scott, I also have one question.
Yeah, sure.
Yeah. Could you also share some your plans? What you're going to do? After like token sales, like finished. So some of your plans on Seek project.
On my personal project?
Yes.
Right now, it's just
one our guy was asking us about your experience. So if you can share just
so right now, yeah, for sure. So right now, what are there's so many projects that are trying to launch, but I echo Mark's sentiment in saying that people have to really take a step back and understand how they're launching their projects properly. So right now, the future for CIF or for my company is helping, like being a primary consultant to those projects and helping them understand and navigate the market, because it is very confusing for somebody who just wants to run a company, but then they run into all of these regulatory issues. So I guess having been through it myself, and I think I'm pretty grounded in reality in terms of what to expect, and as the regulatory environment becomes less gray and very black and white now, as opposed, now we see enforcement actions and whatnot. I think being a steadfast advisor to these companies far beyond the point of no return, which is I think a very valuable service to provide. So that's what primarily I do now. So I work with companies, I advise them, and then obviously what we help them out with software development related to blockchain and whatnot. But it's just basically providing a holistic approach and a little bit of experience, both from the real world and from sort of understanding and navigating this space for the past couple of years now, and bringing that to companies who want to start their own project. And that's where we provide value. In the future, what I would like to do is I would like to work with larger companies who are trying to integrate blockchain technology into their products, existing processes and whatnot. But that market is few and far between, and it's somewhat dominated by industry giants like IBM, who sign these multi-million-dollar contracts with companies and countries that are trying to build up blockchain tech. So that's a little bit out of my league just yet, but hopefully one day. So right now it's just startups.
Thanks. And have you faced with any legal restrictions, because you are based right now in Canada? So just share, because legal questions are very important.
So I've been working with a securities lawyer. I've actually worked with two, one based in Canada and one based in the States, and we're trying to navigate how my project should proceed. As well as I've developed a relationship with these two lawyers, so that I'm happy to provide the contacts to anybody who's looking to start a project, because I think it's very important to speak to these people before you, especially now, And if you're going to open it up to you know, to a sale in the States, like Mark said, there's no beating around the bush. So it's to get advice from these attorneys, and that's what I'm working with now. And I also refer them to clients who I work with, just so they get a dose of reality before they go too far. So.
Thanks. I guess we are done. And thanks for all participants, for our speakers, Mark and Scott. Thanks for joining us.
No.
It's also interesting just to share like real stories, and we just expected to have just 45 minutes, but like 1 hour left. Thanks for guys for joining us. You can like just follow us. Yeah, we will share definitely then the video recording, and you can ask any questions regarding the ICO and tech questions, how to launch it. We are open for discussion. Thanks. Bye.
Great, many thanks. Cheers, everyone. Bye.
Bye, Scott.
Bye.